looks like shit. Let's put it up here and then start the video. So, hello, how's it going, guys? Welcome back to MENTFX. Now, the last week or so has been fucking insane. I should have had a video on my channel, and I think I uploaded it from a webinar that we had a while back going over the action on Bitcoin. Let me actually get rid of some of these things on the chart so they're not in your way, just like this, so there's not as many colors. And what you'll notice from that prior video, or you can kind of watch this one, is that with our team, we've been very bullish on Bitcoin, to be completely honest with all of you, since around these points right here. And we started to follow this thing long. At some points we stayed away. At some points we started following it long again. I personally took one of my best trades in this year, in 2024, right here. So inside of here, I actually took one of my best trades this year, which was phenomenal. Then price continued. I then tried to actually retrade it a few times. I think I tried to trade on it somewhere in here, somewhere in here, somewhere in, actually I watched, but I did not execute inside of here because there was no trade. And then price kind of fell down and was, it choppy for a while. To put it in a simple sense, because of how the MENTFX structure indicator works here, which you guys have access to completely free by just clicking on this one, which is public and free. It just contains the blue ones though. Now again, I wouldn't have it super dark on your screen because you don't want to let it affect you too much, but it's a great way to pinpoint where you are. But basically, we've been in this range for a very, very long time. And inside of this, right, we didn't know if we were going to be accumulating, if we're going to continue chopping, or what was going to happen. But what we do know is that in an overall bullish market, which is what this market was, and we're in a long range, what we oftentimes want to see is price basically come up the right-hand side of price, which is basically when, if you think about price, like if you think about all this chop here or whatever it's doing, what you want to think about is if price flushes out, basically moves down, and then you divide that part into like a middle. At what point does buying start coming in a way where you may want to start getting involved again, right? So what it means to trade on the right-hand side of price is ultimately, even in a long range, when price starts coming up the right-hand side of something. So again, you can see when I started trading here, it's because I thought we were coming up the right-hand side of whatever this move was to continue move higher. That's how all moves work. When I started trading here, it's because I thought we were coming up the right-hand side of the move to keep moving higher. When I started trading and looking at price action here, the exact same thing happened. So again, it's fine to be wrong a few times in a row. It's fine to have analysis that doesn't play out, but what's important is how you execute upon the analysis that actually shows up. So looking at crypto here, right, we've been kind of range bound in this thing for a while, and we didn't know if this was going to end up going bullish or bearish, but our team did. And that's because we have a multi-time frame way to approach trend, and we have a few cycles that we look for when it comes to something we trade. So for instance, let me open up this right here. This is actually the overall portal material taught in the private mentorship, which I make available completely publicly and free here in terms of the things I actually work through and teach. It's just that the portal material within the mentorship contains more stringent step-by-step approaches, which give me a better chance to teach someone that's able to watch like long form content. But very simply, the way the entire market functions ultimately is using the cycle that you see right here. So this is what we call a momentum or validation cycle because it's happening on a higher time frame, and this cycle right here. And this is your overall basically accumulation into continuation cycle. And what we do is we try to get involved on the accumulation MBs that form off of this cycle creation, or based on the kind of person you are, the momentum MBs that form through the continuation of a certain cycle. So again, all of these blue lines can act as buy stops to get into a bullish market, okay? So that's ultimately what's happening. This is what I'm looking for. So at the time, right, when I go to a weekly, so if I step up the time frame, and this again puts us inside of this kind of very, very large range. This is that larger range on the daily, but if you look at this on the weekly, what we see, right, from kind of a left to right perspective is, well, price was bearish for a bit, it started breaking bullish, it started to clearly accumulate, started to ride these moving averages higher, came down, accumulated higher, rode higher, accumulated higher, started to go sideways, and again, you can see very simply why I started to trade some of these areas here. I was expecting price to reach into the 86K, 100K base prices on Bitcoin back in April, just to make it very clear to you guys. I'm not here to pretend like I predicted everything at the exact moment, but I'm also not here to pretend like if you predict something or get it wrong, that it means you're taking losses, because that's not how it necessarily works, because there's multiple moving parts to a system, and to a system, there's multiple moving parts to the models that are occurring, and when you marry all of those together, you create the best possible odds of staying out of bad action and getting involved when the action gets good and has the likelihood of delivery. So what's really cool about the way that we trade and the way that we think is that if price starts to fail down, we end up doing nothing and the market becomes something we don't have to watch. If the market holds up, which is something that it did, right? So the daily, we saw that range hold up. The weekly, as we can see here, did start a little bit of a chop. I started trading it in here initially, then it started to fail and chop and chop and chop. And around these points right here, as price started to basically take out or move higher, so as it made this push, as it started to pause across these rising averages, and literally at this point right here, so if I do a little green arrow, at this point right here, which is the same arrow that you saw in my last video, which is why I really recommend you check out my previous video to this one, this is where basically all systems were a go. It didn't matter that the election was coming up. It didn't matter who was going to get elected necessarily. It didn't matter what the fundamental news of anything was. All that mattered is that a market that had been proven to be bullish and proven to be an accumulation and started to respect the models we were looking for and was trailing and trading above the moving averages has recently done the same thing. It went through a reset, it went through a move, a pause, and the beginning of a move higher. So what it did on the weekly time frame, at least, because the entire market is fractal, is it set up this exact move right here, specifically this guy right here. So if I zoom out and you take a photo of this, you should be able to see how crypto on the weekly basically was right here. This is exactly where Bitcoin USD was, okay, right here. And at that point, we had started to assume that, okay, this is starting once again that bullish push. And to be honest with all of you, I thought that might have happened back here, and then price just failed down and there was nothing to do. I am very stringent, I'm very strict with the actual opportunities that get presented and whether to take them or not based on how they're delivering. So at this point here, as you saw in the last video and as you're seeing now, this is when we got long and very oriented long on Bitcoin. And as a result, a lot of our team members, maybe I'll actually plaster some of the people that traded like boom right now. Great. That traded this entire thing up. And, the expectancy when I first made that video, that prior webinar that you guys can see as part of a previous video, that's exactly where this came from, right? This is where I said it'll probably go to 84K, 100K, and we're gonna look to trade this thing as it continues. So that's beautiful. And we had that delivery happen. Now the question becomes, what are the actual ways in which that we can get involved on this thing? Because, if we want to get involved, how do we do that? Because, it's great that there's bullishness. It's great that it was delivering. It's great that you took wins and stuff, but where are the actual opportunities? Now, the last time something like this happened, right, was right here. This is where I brought my team's attention to last week or 2 weeks ago, 3 weeks ago. When was this? I brought this to my team's attention, okay, but basically a long ass time ago. But very simply, yeah, the same thing happened. Price proved that there was bullishness, started to basically validate bullish models and bullish MBs, and was bullish, right? Corrected a little bit, maybe became bearish for a bit, but then came right back up and paused perfectly on those averages to start a potential move higher, right? So basically crypto, when we started getting long on it again, was at this exact moment here, but recently, right? So this was back in 2023, and now we're in 2024, and after this entire run, and after this big pause, we had the same thing happen here. And what's very important is that if you get very used to seeing the similarity between what I just showed you and seeing what we're seeing now, right, you're going to get very, very good at seeing this the next time it occurs on any asset, on crypto, on a future, on a stock, on a commodity, on a gold, right, on gold, on a shitcoin. It doesn't matter, on a Forex pair, on GJ, on UJ. It's all the exact same thing, but the question is the move clear enough? Because this is when it comes down to, we're not a pattern-based trader, we're a context-based trader, and when it's very clear, then we want to be in an executing environment, right? So this is where that move actually came from. Now the question becomes, once again, how do we trade this? Well, the beautiful thing about fractals and the way the market functions, right, if you have a proper time frame template and trend template, is that once a move like this occurs, you're aware that this cycle right here, because of the way that it works, this is going a little bit into the portal material that is private, but I'm gonna try and make it available to you guys right now. So the V and the C, this is the validation time frame and the context time frame, refers specifically to the higher time frames in reference to an entry time frame. And very simply, the rule of EVC, as taught in the MENTFX mentorship, is, let me locate this for all of you because I need to find where the actual EVC rules are, so you guys can actually see this and apply it as necessary. So the simple EVC rule is as follows. If you understand this, you basically already have a better understanding than most people in the market. You are free to use multiple timeframes, even more than 3. I personally use more than 3, but this is the general assessment for how you want to decide what timeframes to really kind of peek into to understand if there's a worthy move. So based on an entry timeframe, if you multiplied by 6, you'll get a validation timeframe. Multiplied by 10, you'll get a context timeframe. This is your EBC rule and the best and easiest way to understand what timeframes you should start to look at. So what happens is, if you're on a V or a C, what you're looking for is ultimately this momentum-based delivery of a model. Again, and this is the cycle that it actually goes through. And again, there is no multiple cycles, all these different things to learn, all these crazy words. Instead, it's simply, this is what happens to a move that works. That's it. So what's cool is if you understand that, and this was most recently taught in the most recent portal, you'll have to do away with the fact that, this is a simplification of it, but this is ultimately what it is. Once you understand that cycle, no matter what V or C or higher time frame you use, you can continuously play through the cycle of momentum and work your way down into the same things over and over again, because those cycles will repeat. Those cycles will repeat, those cycles will repeat, and those cycles will create those same opportunities that lead to either demand-based entries from a move down into the move up, or as the move starts moving higher, the momentum-based entries, right, through the tops of a delivering entry time frame, okay? So let's talk about specifically what you could have done in reference to opportunities on crypto, right? And how could you have actually traded this based on the type of trader you are, the timeframes that you're working with, right? What could you have done? So at this point, this is again where I spoke with my team about the bullish delivery, which is great. That's a starting point. And that came from the fact that cyclically we're delivering. We have an overall model that's delivering bullish and moving in bullish. So of course we expect bullish. That bullishness is being sustained by the fact that money's coming in to be bought at the averages and price is failing down, which is okay, which is when, at this point here, I thought price might have done this for the next few years. I had no idea. But instead, it got reaccumulated, right, rebought back over the averages and paused on the averages. So the idea here was, okay, we're going to move higher. And just so you guys know, while I'm still here in front of you, the way I'm going to be playing out or thinking about Bitcoin going forward is pause again, continue, pause again, continue, and then maybe we'll be kind of extended by that point, and then we might have a failure, right? So there's no reason this can't, over the next year or two or whatever it might be, go to 130K. So again, I'm going to keep my eyes on this, given that this is continuously delivering in this beautiful, beautiful context. That's very important because when I approach any market, I already know what I'm doing on it, given the delivery. And that's very vital. Now, what I can do is I can step down. And I know that when I step down, so let me do something very easy here to make this very clear. Let me move this over, brush, let's go like this, let's go like this, and let's go like this. And we'll just call this the weekly, okay? Because that was the weekly. So we know that on the weekly, right, as we go over to the weekly, we are clearly in that bullish model. We've just started a validation or context-based cycle, which would be this cycle right here, on the weekly, and we're actually right here in the very early stages of it at the moment. That's all we know. So we know that's going to be made up of lower time frame, same moves. It's going to be made up of lower time frame accumulations, momentum, 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 failure, accumulations, momentum, 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 and that's going to repeat itself in the scenario that this market is going to remain bullish, right? This is the exact same approach I use on anything I look at. So as I go over here and I go to the daily, and I hide the weekly here for a second, right? I already know what's going to be happening. So similarly, from that weekly point, which was basically, and what I do normally to define a momentum MB, which is this point right here. So these right here, these stages, these bases, these fractal stages, whatever you want to call them, 1, 2, 3, 4, they're known as momentum MBs. So what I do is when I'm looking at a momentum MB, which is what this guy right here would be considered, right? I tend to just draw a little line that shows me. So again, it's very gray. It's very hard to see because again, I don't like it to cloud my chart too much, but I just draw a line. And ultimately, right, these lines just define from where new demand might come in, and if it comes in, where it's going to kind of sustain above, right? So I just draw those in because it gives me a good understanding to how price should basically pause. If the pause is going to be big or small or whatever it might be, this is what defines that for me. So for instance, if I try to do the same thing like up here, right, you can see like this thing just failed down. There's nothing to do here because, well, there's a big difference between how this line here looks versus this line here. Similarly, like this is great right here. These are great mini pauses and they count as momentum-based. They're basically momentum bases. They're momentum demand points. They're momentum MBs, as I call them in the mentorship. So if I go to the daily, what we're gonna see from that first point is, well, exactly what we said we would see. So yes, we are stuck in this large range. It's a bullish range, but we're still stuck in that range. And from there, right, what we've done is we've started to come up kind of the right-hand side. We made that push higher, and we did it through actually a few momentum MBs. We went through kind of this 1, 2, maybe 3, 4, you know, it's not always perfect, but kind of through these 4, and then we failed down drastically. Now, this is beautiful because when we fail down like this, when we flush out, when we sell down, a lot of people start getting bearish in these points, right? No matter who you are, people are looking for resistance to get short. People are looking at random imbalances to get short, new imbalances to get short, change of characters, break of structures, crossovers of the MAs, whatever it might be. People start getting short because, again, when selling comes in, well, that's sellers coming in. Those sellers could be for the purpose of buying up new prices, or because there's just dumb money getting involved in the way where they don't understand what they're doing, or prior people that were long start getting out at new sells and then maybe even change their mind over the entire market. Now, you know, these are the points that define and create beautiful opportunities in the market overall. We got some coffee here. Give me a sec. Okay, so what I mean by that is when this sells down, all that's happening in my mind, in my book, is we're going through one of these things here. This is what we refer to as a re-accumulation, where price is already maybe delivering bullish. It breaks down in whatever way, usually under the moving average, which is what you see right now, and starts to create new potential demand higher, and that actually creates the new momentum MBs to go long. So what's cool is if that's happening, we can use that to actually trade this on a lower time frame, or we can use it outright to actually get positioned on the daily. So for those of you that are maybe longer term traders or swing traders or want to hold longer or enter on the daily, already this is the starting principles of a potentially very, very good market, right? Because what we've done is we're starting to come up. You know, there was a left side of the market, which was just bearish. We started coming up. That was the weekly push up above the MAs. Price started to come down into the MAs of a higher time frame, because remember, this is coming to the MAs of a weekly, right? There they are. Don't forget that. This came to the MAs of a weekly, which is important because that's sustaining a bullish move. Even though on the daily, it looks like we might be breaking down. But again, this is why we move through steps of aligning ourselves with the market. And then what happens is, as we can see here, price starts to put in demand, and these are the first points that actually provide opportunities for someone on a daily chart, right? This is simply known as the double MB. If we look down here, the ATR is set to 3616. So what you can do is you can set your ATR to be, is that correct? 3616? 3616 is down here. This must be like a multiple or something. That looks like a very large ATR. Usually I don't have an ATR that large. So, you know, my stop would look a little bit something like this personally at the moment, but you know, there's ways to make this even tighter to make it even better. But for a lot of you, this was a phenomenal Bitcoin entry that presented itself through what I call the double MB, which is basically this kind of entry, this kind of entry, this kind of entry, this kind of entry, initially on this move. Now, not all of us are trading daily charts, and that's perfectly fine, but this is a phenomenal opportunity that came through the setup of that first weekly validation. However, what's really cool is that if we get rid of these now, and we get rid of this line, because that's a weekly baseline, so let's go like this actually. So let's get rid of this, let's put this into the weekly basket, let's put this in the weekly basket, because those are the weekly ones, and then we look at the daily from its own standpoint now. What we also see is we get this breakdown, that's a flush, and from there comes the buildup of demand and MBs, and as a result, if I use my line again, we create a momentum MB. That's kind of the first, then we create the second, then we create this third, we kind of create this fourth, maybe it's not a fourth, maybe it wants to pause again, and maybe this is a fourth right here. We're not 100% sure, but you know, we kind of have 1, 2, 3, or 2, this is all could act as 2, 3, and maybe this is the fourth for another move right now, right, to maybe like 96K before a failure back down, before a new setup for later, right? So this is, again, how markets function. So what's really cool is that we can now use these same points, if we take all of this and throw it together into a daily basket, right? This is how you do multi-time frame analysis. Then what we know is that these points, let me put them back on, are going to act as the same thing that we see here on a lower time frame. This is what fractals in the market look like. So if I move to an even lower time frame, maybe like a 2-hour or a 4-hour, this is just preference because again, the setups might be clearer based on the time frame that you end up looking at. So maybe the 2-hour might be a little bit better than the 4-hour because the setup might be a little clearer, and other times a 4-hour might be clearer than the 2-hour, right? This kind of this kind of hybrid approach where you start understanding how orders flow into the market should also show you that the market is not as one-dimensional or black and white as most traders, mentors, whatever you want to call it, signal providers, make it out to be. The market is not based on an indicator doing a certain thing at a given moment, and as a result, it's always going to act a certain way. Instead, the market is based on the understanding of how money tends to enter a market, of how opportunities are created, of how institutions, large money, retail gets involved in something, on how dumb money gets taken out. All of these things put together and married into a system that can create potential opportunities is what gives you an edge as a trader. Edge is not created just by having an indicator. It can help. It can be a big help, which is why you can see I have a few indicators on my own chart. But there is a story that is always being told by price. And your job is to basically ask if the story is worth listening to, right? So, if you come to me and I'm like, the guy went to the lemonade stand and he spoke to the duck, maybe you're not that interested in that story and you go, okay, fuck off. This is stupid as shit. I don't care about your story. But if I tell it a little bit differently, or if the story evolves into something crazier, and the duck pulled out a knife and said, quack, quack, motherfucker, you'd be like, hold on, this story is interesting. Maybe I want to read it. And similarly to the market, what you're doing is you're asking yourself if the story being told by the components of that story, by the characters in that story, by the way the characters are responding. So think about the ranges, the moving averages, the actual move themselves, the pullbacks, the veracity of the pullbacks, how strong or weak the pullback is, right? All of these things put together, which is similar to the characters in a story or what the characters are saying or how the characters are dealing with certain things, are aspects that increase the likelihood that you read a story or follow a story or don't. And in the scenario that something is moving in a way that has continuously portrayed itself as something that's worth reading, that's worth watching, think about a series of books that you've read before, maybe like Game of Thrones or The Hunger Games because you enjoy them, right? It becomes something that you want to consistently show up to take, and it's something that you want to consistently put your risk behind because it can make you money on the risk that you put in, not financial advice. So similarly, as I go lower now, and we look at this, these are going to act as the same thing we saw before. These pauses are going to become what? These pauses are going to become the moves down into some of the MAs, the buildup of some demand, and then the continuation through demand, followed by, likely, some validation-based moves that could be quick, some momentum-based moves that could be quick and then fail, or could sustain even bigger move higher. Because if a trend is going to be a true trend, well, as we all know, the trend is going to literally go fucking wild, right? And if you take a look at this, even from back here, right, you have the same thing start happening. You have the buildup of some demand, and again, just like you just saw on the daily, all of a sudden you get this beautiful 4-hour based entry that goes for a crazy move. Beyond that, you do get further entries, right, that act as momentum entries, and those are harder to take. Or, you can build a system around them, but, these are some moves that you can take, but you have to be quicker with management. This is where in the portal material, and you guys can pause this and take a look yourself, because again, you don't have to pay me to learn any of this. You can kind of pause these from my public videos, but the point is that you get profitable, you start even making your first dime, and then you join to get access to some of the cool teams, the people, and the tools, right? But this is the ultimate characteristics, the simple characteristics of accumulation-based or momentum-based MBs. So you can pause this, take a photo, whatever, now you have it, good. But very simply, there are characteristics to the type of moves that can happen, right? When you're looking at accumulation-based MBs, the ones that are deeper into a move, those are going to have different characteristics, especially with entries, than the ones that you take maybe up here, where you're entering a momentum-based one where it's higher up in price, or like this one up here, or like this one up here, right? These are momentum-based moves. And there's different ways to manage them. Now, similarly, as we go into this next kind of daily pause, right, what do you see? Well, you're going to see the same thing happen. You start getting the buildup of demand, right? And again, you have those initial accumulation MBs, the initial accumulation/momentum MBs, and then the momentum that can act as some quicker moves, right? Those are phenomenal. Then again, you get that pause, right? You get that pause on that daily, and on a 4-hour, where are your opportunities? Well, you get that demand, that's a beautiful opportunity. Demand, that's a beautiful opportunity. These are those exact opportunities that, are exactly the same as what you see on that daily. These are those same things, right? And then similarly here, you do get this like daily pause. You can see it's not as clear for the setup that I'm looking for, but it's still made up of the same things. What I mean by that is it kind of comes down, you get that kind of MB1. This could be an MB2 or MB2, or you could treat this entire thing as a momentum MB to enter. So what you have is you have a few things stacked together, especially from the characteristics. You have the momentum MB setting up within a the accumulation MB setting up within a momentum MB, which might lead to you taking an entry like this to take this higher, right? These are all opportunities that are present that might not be per your personality or perfect for your actual system, but I want to demonstrate to you that there is edge in understanding how trends deliver and doing so across fractals. But now what's really cool is, once again, if we take all of this and understand that it's a 4-hour based approach right there, right? That's the 4-hour. And then specifically these lines right here, actually these all right here, all these lines, wait, if I select them all, whoops, control. Okay, so I can't select them all. So all these lines are the daily baselines, right? So if I hide the daily now, and we look at the 4-hour now, actually let's look at the daily for a second here. You can see where price is now, right? What is it doing? Well, it's setting up the exact same kind of thing for you, right? At this point, maybe you consider this move itself. Well, I said it could maybe make another move. So on the 4-hour, right, what is this actually doing? Well, it's setting up a move for you, right? It's flushing out, then what is it doing? It's creating demand. It's creating demand, right? In this scenario, and this is all happening within a big momentum point, right? In the scenario that this comes through this high, there's no reason that a trade like this isn't good, right? And then if you use what I've taught in the last few videos I've made, right, this can tap in. That could be your move to break even. And then that can either start this move that we're talking about, maybe to that 99 or 100K, right? And then that could be your profit. Or, right, it takes you out of break even and maybe sets up a move a little bit later. This is what your trading can be approached like, right? Again, I don't want to show you this is all just hindsight because, you know, most of this market was predicted way beforehand. You can see my prior videos. It's the same thing on repeat, but this is how you set yourself up for moves. Now, what's cool about this? Well, once you understand the models you're in and the way that the market is moving, all of a sudden, let's hide the daily. Let's put this in the 4-hour basket. Let's leave that on for a second. All of a sudden, those same accumulation MBs or entries from any of those points, but we'll just choose this leg here. We'll choose this leg and, well, everything we're in right now, and we'll hide this. You have the same thing happen. On the 4-hour, what do you have? As price moves higher and pauses, those could become those momentum MB entries of a lower time frame. Here as well, 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 and all of these points here. So again, why do I draw the lines like this? Because this is what I've just been doing for myself. It's been working the best for me, so I'm more than happy to do it, right? Let's put those all in the 4-hour pile now, just like that, and step down lower. So again, what time frame can you step down to? You can do a division by around 6 as per the EVC, but this is preference, right? Maybe we'll go to a 30-minute just for the sake of doing this. So where should the clear opportunities that look a little bit something like this ultimately come from, right? Where you can enter through kind of these points here. Well, they're going to happen at those pauses of price that happened on the higher, because this is a repetition and a fractal of the same thing on repeat. And again, there's plenty of more action that you can study and see moves inside of, but I'm just doing this inside of just the most recent, some of these legs, because I want to show you what's applicable and what's available to you as a trader. Now, here we go. Let's zoom in here. So again, same thing happens. After the first one starts getting formed, what do you see, right? MB1, MB2. The exact same move that we just saw on a daily based entry and a 4-hour based entry is now available on a 30-minute based entry, because all that's happening is price is repeating what it does every single time through a cycle. So it sets up that one, then it creates a momentum MB, then it creates another momentum MB up here, which you might not enter due to the insane move here. But again, that's just preference. Into what? Another pause. Into what? Another setup of an MB and an MB. Now, again, this is an example of a break-even trade, for instance, but still, I want to make it known and show you it here because it's still a trade. And then again, you get kind of like this MB1 here into MB2, or an overall MB here. Perfectly fine to enter either one of these here or here. This would probably be either a small profit and then a break even, it looks like, followed by, again, the same exact thing right here, followed by a momentum one here, again, you have the exact same thing happen, exact same moves on the 30-minute. We're going to go to the most recent action so we can keep doing this lower and lower and lower. But what we're going to do is we're going to look to the right here. We'll start from somewhere here. And again, what happens in these pauses on these momentum MBs? Price comes down, builds the accumulation MBs, builds some momentum MBs, and goes, right? And again, you have the exact same formula for an overall move, for an overall move, for an overall move, for an overall move based on what you're looking for. This is how you make use of trends, and they're all following the same criteria, right? On an entry time frame, price starts kind of moving bullish, right? Price is moving bullish. Price is moving bullish. Maybe it breaks down, but we know that when it breaks down like this, it's oftentimes the purpose of bullishness, just comes up very heavily, then breaks down again. And what happens in these points? People start getting short. People are looking at whatever other time frames. They're looking at resistance. They're looking at imbalances. They're looking at supply zones. They're looking at the break of characters here, and they're looking to take this down because, again, they're constantly wondering when does the trend end, rather than asking themselves, where are we in a cycle of trend, and how can I get behind it, given that there's still opportunity to the top side. This is how that's created, right? So if we look at this again, 30-minute, you kind of get this MB, 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 then you get this momentum one, and then it fails. And then again, same thing, accumulation slash momentum that never gets, created, and then it fails down. But what's really cool, I wonder, let's add all this into the 30-minute pile. And let's hide the 4-hour pile. So what's really cool, based on the kind of trader you are? Well, what do you think? 1, 2, 3, 4. 1, 2, maybe something in here, but I don't really see anything. Maybe there's a 3 in here that then fails. What do you think is going to happen inside of these areas again? Go to a 6-minute or a 5-minute, just preference. You can go to 5-minute, doesn't really matter. All right, where do I have some of those lines? There it is. Cool. What do you think is going to happen inside of some of those lines, right? You get kind of your MB1, MB2, this probably would be a break even. MB1, MB2 is a momentum MB, and again, you have the same rules. Momentum MB, right, through the high maybe. Momentum MB through a high, doesn't get tapped in, let's say. All right, again, this is just preferential in terms of how you're entering these. Maybe you get stopped out of that one, or maybe you get tapped in. Don't know exactly, but the point right now isn't to show you, oh, look at all this money that we're making potentially. It's just to show you what the fractals of a market look like, so you can start to use these exact cycles right now in understanding where you are in a move, and then what kind of moves you're going to be personally taking as entries, okay? Again, kind of MB1, MB2, but very hard to see. So, probably doesn't get traded unless you're entering through the overall momentum, which would be this right here. Right, same thing. And again, in this case, I don't see any great opportunities, but that's fine. The opportunities are not always going to be present necessarily, right? They're going to present themselves over time, but they're not always going to be present in the areas, right? So these are some nice ones. Here's a momentum one. Just beautiful, beautiful delivery. And if we step down lower, you're going to see the same thing. So again, I ask you the question, right? If we, you guys should be getting a little bit bored of it, right? If we go inside of here, okay, inside of here, here, on a 30-second, what's going to happen? Overall accumulation. Work yourself through it. What do you see? What do you guys see? Is there consistency in the way that prices tend to set up and make moves? Or no?